Welcome to TechEyeSpy, where we break down the business and investment landscape with sharp analysis and in-depth research. In today's episode, we're diving into Implanet SA, a company making waves in the orthopedic implant industry. From spinal surgery solutions to knee replacements, Implanet has carved out a niche. But is it a smart investment, or does it face too many risks? We'll take a comprehensive look at the company through a SWOT analysis, breaking down its strengths, weaknesses, opportunities, and threats, all in a way that gives you the full picture before making any investment decisions. If you enjoy insightful, no-nonsense financial breakdowns, make sure to subscribe to TechEyeSpy and turn on notifications so you never miss an episode. Now, Implanet has established itself as a notable player in the medical technology sector, particularly in orthopedic surgery. The company's flagship product, the Jazz trademark spine system, exemplifies its commitment to innovation and collaboration with specialized spine surgeons. This system is designed to improve the treatment of spinal pathologies requiring vertebral fusion surgery, reflecting Implanet's dedication to addressing complex medical needs. Additionally, the Madison knee implant showcases their expertise in developing solutions for first-line prosthetic knee surgery. With a presence in multiple international markets, including France, Europe, the Middle East, Africa, and the United States, Implanet demonstrates a robust global reach. Their focus on quality is evident through their adherence to stringent quality policies and certifications, ensuring that their products meet high standards of safety and efficacy. The company's strategic location in Bordeaux, France, and its listing on the Euronext exchange further underscore its established position in the industry. However, Implanet faces certain challenges that warrant attention. The medical technology field is highly competitive, with numerous companies vying for market share in orthopedic implants. This intense competition can make it difficult for Implanet to distinguish itself and maintain a unique value proposition. Financially, the company has reported net losses in recent years, which may impact its ability to invest in research and development or expand its market presence. Additionally, the reliance on a limited range of products, primarily in the spine and knee segments, could pose a risk if market demand shifts or if competitors introduce more advanced solutions. The need for continuous innovation and adaptation is paramount to address these internal weaknesses and sustain growth. Looking ahead, Implanet has several opportunities to capitalize on. The global demand for orthopedic solutions is on the rise, driven by an aging population and an increase in musculoskeletal conditions. This trend presents a significant market opportunity for Implanet spine and knee products. Collaborations with healthcare institutions and professionals can lead to the development of new products and the enhancement of existing ones, ensuring that the company remains at the forefront of medical advancements. Expanding into emerging markets, where access to quality orthopedic care is still developing, could also provide new revenue streams. By leveraging its existing expertise and reputation, Implanet can explore these avenues to drive future growth. Nonetheless, the company must remain vigilant against external threats that could impede its progress. Regulatory changes in different countries can affect the approval and distribution of medical devices, potentially delaying product launches or increasing compliance costs. Economic fluctuations, particularly in key markets, might impact healthcare spending and, consequently, the demand for Implanet's products. Additionally, advancements by competitors in orthopedic technology could render existing solutions obsolete, necessitating continuous investment in innovation. To mitigate these threats, Implanet should focus on diversifying its product portfolio, enhancing its adaptability to regulatory environments, and maintaining a proactive approach to technological developments in the medical field. Implanet, for all its strengths in orthopedic innovation, is not without its frailties. A company in the medical technology sector lives and dies by its ability to maintain financial health, and Implanet has struggled in this regard. Losses in recent years paint a concerning picture. Investment in research, marketing, and expansion is necessary. But when the balance sheet tilts too far into the red, survival itself becomes an uphill battle. Cash flow constraints limit the company's ability to take bold steps, be it acquiring new technology, expanding into new markets, or scaling production. Then, there is the matter of product dependency. While the Jazz trademark spine system and Madison knee implant are commendable feats of engineering, a narrow product focus creates a bottleneck. Relying heavily on spinal surgery solutions and knee implants means the company's fate is tied to a specific segment of the orthopedic market. If a new, more advanced spinal fusion system enters the scene, or if shifting surgical trends favor alternative treatment methods, Implanet could find itself scrambling to stay relevant. The company's product line, though strong, lacks diversity, a risky proposition in a rapidly evolving medical landscape. Beyond finances and product limitations, there is the question of market penetration. Implanet's footprint outside its home market of France is present, but not dominant. The United States, one of the most lucrative medical device markets, remains an area where the company has yet to secure a firm hold. Competition is fierce, and breaking through the well-established networks of major orthopedic device manufacturers is no small feat. Without deeper inroads into these key markets, revenue growth will continue to be a challenge. Lastly, regulatory pressures remain a thorn in the side. The medical field is subject to ever-changing compliance requirements, and meeting these standards is both costly and time-consuming. A single delay in approval or an unexpected change in regulations could hinder product launches and slow down business momentum. Unlike tech startups that can iterate and adapt swiftly, a medical device company is often at the mercy of regulatory bodies. Any misstep in this domain could not only result in delays but also damage Implanet's reputation and credibility. The weaknesses then are clear. Financial instability, product concentration, limited global market penetration, and the burdens of regulation. If left unchecked, these factors could become more than just obstacles. They could be existential threats to the company's future. Implanet stands at the threshold of significant growth opportunities within the orthopedic implants market. Projections indicate that the global market, valued at approximately $45.19 billion in 2023, is anticipated to expand to $71.74 billion by 2032, reflecting a compound annual growth rate of 5.3%. This upward trajectory is driven by an aging global population and a corresponding rise in musculoskeletal disorders. North America currently dominates the market, accounting for over 55% of the global share in 2023. The United States, in particular, is a significant contributor, with its market size projected to reach $35.57 billion by 2032. This growth is propelled by a high prevalence of age-related musculoskeletal conditions and substantial healthcare spending. For Implanet, this presents a substantial opportunity to deepen its penetration in the US market, especially with its Jazz spine system and Madison knee implants. Europe also offers promising prospects, with Germany leading in the number of hip and knee replacement procedures. In 2021, Germany reported 301 hip replacements and 201 knee replacements per 100,000 individuals. The region's aging population and increased healthcare expenditure further bolster the demand for orthopedic solutions. Implanet can leverage its European base to strengthen its presence in these markets. The Asia-Pacific region is poised for the fastest growth, driven by rapidly developing healthcare infrastructures in countries like China, India, and Japan. The rising incidence of orthopedic ailments, coupled with improved diagnostic tools, fuels this demand. Notably, China, with its vast and aging population, represents a lucrative market. However, companies like Smith & Nephew have faced challenges due to China's volume-based procurement program, which has impacted prices and demand for orthopedic products. Implanet must navigate these complexities carefully to capitalize on the region's potential. In summary, by strategically focusing on these expanding markets and tailoring its offerings to meet regional needs, Implanet can harness these opportunities to drive significant growth. Threats to Implanet's future are many, and they are formidable. In the world of orthopedic implants, competition is relentless. Giants like Medtronic, Stryker, Zimmer Biomet, and Johnson & Johnson's DePuy Synthes cast long shadows over the industry. These behemoths possess extensive distribution networks, deep R&D budgets, and brand loyalty from surgeons and hospitals. For Implanet, standing out in this crowded field is a challenge. When a hospital administrator is choosing an implant supplier, the safety of a well-known multinational often wins over the appeal of a smaller company, regardless of innovation. Then, there's the ever-present risk of alternative treatments. The field of regenerative medicine is advancing rapidly. Stem cell therapies, cartilage restoration techniques, and biologics are gaining traction as less invasive options for conditions that once required implants. If these technologies continue to evolve and prove effective, the demand for traditional orthopedic implants may decline. For a company so reliant on spinal and knee implants, this shift in the medical landscape could be catastrophic. Economic forces, too, can be ruthless. Healthcare budgets fluctuate with economic downturns, and governments worldwide are seeking cost-cutting measures. In Europe, the increasing pressure on healthcare systems has led to more stringent pricing controls on medical devices. China, a potential growth market, has implemented a volume-based procurement program that forces companies to compete on price, eroding margins. If such policies expand to other regions, Implanet could find itself trapped in a race to the bottom, unable to sustain profitability while competing against larger, more financially resilient firms. And, of course, the specter of regulation looms large. Medical device approvals are subject to ever-changing legal frameworks across multiple jurisdictions. A delay in regulatory approval in a key market could mean missing critical sales windows, while failure to comply with new regulations could result in recalls, lawsuits, or loss of market access altogether. Unlike a tech startup that can iterate quickly, a company dealing with human health must navigate a minefield of bureaucracy, which slows down product development and market entry. Lastly, technological obsolescence is a constant threat. The industry moves quickly, and an innovation that makes today's implants more effective, cheaper, or safer could render existing solutions outdated overnight. If Implanet does not maintain aggressive research and development to stay ahead of the curve, it risks becoming irrelevant in a market that rewards the cutting edge. In a world of fierce competition, economic pressures, regulatory hurdles, and emerging medical breakthroughs, Implanet's path forward is fraught with risk. But for those who navigate these dangers well, the rewards can be substantial. Implanet is a company that walks the fine line between innovation and vulnerability. On one hand, its Jazz spine system and Madison knee implant highlight a strong foothold in the orthopedic market, backed by expertise and a commitment to quality. The company operates in a growing sector, with aging populations and increasing musculoskeletal conditions driving demand for orthopedic solutions. Global market expansion, particularly in North America, Europe, and the fast-growing Asia-Pacific region, presents tangible opportunities. Yet, on the other hand, it faces significant challenges: financial instability, reliance on a narrow product range, and the sheer dominance of industry titans like Medtronic and Stryker. Competition is fierce, alternative treatments are advancing, and regulatory burdens are relentless. The company's ability to expand its market presence in high-growth territories while diversifying its portfolio will be critical in determining its future success. So, is Implanet a worthwhile investment? For a risk-tolerant investor seeking exposure to the medical device industry, it presents a speculative opportunity. The company has a niche but valuable set of products, and if it can overcome financial hurdles and scale its market penetration, growth is possible. However, the risks are substantial. Investors must weigh the potential rewards of a growing market against the stark reality of financial struggles, competition, and shifting medical technologies. At this stage, Implanet is not a stock for the faint of heart. It is a bet on a turnaround, a belief that the company can leverage its expertise, expand strategically, and remain competitive. If it succeeds, the rewards could be substantial. If it fails, it risks being overshadowed, or worse, becoming. Thanks for watching. If you found this analysis insightful, don't forget to like, share, and subscribe for more deep dives into the world of business and investing. Your support helps us bring you even more in-depth research and analysis. See you in the next one.